Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, like the video, subscribe to the channel if you haven't done so already. I did finish the week with 15 wins and 3 losses for a win rate of 83.33% for the week. So definitely a little slightly below my weekly average, or I shouldn't say weekly average, weekly goal of 85%. Slightly below, but it was still a good week. Can't complain whatsoever. So with that said, we'll just get right into it. Now, Trade is room, let's see, the 9th was what? Where is traded? There it is. The 9th, SPY puts into 426 when we get the 9th here. Is this it? Yep. We had this massive run up from Friday. So I was thinking, okay, we had a run up on Friday. We gapped down and just kind of chopped sideways in the channel. So I was thinking we were going to drop at open. And we really didn't. Mondays have been those days where I've just been, the last few weeks, I've taken the first trade of the week. It's just been a loser for me the last few weeks. I know I did this one other time back several months ago, that the first trade of the day of the week, I just was taking so many. I took a loss every single time for like a month. Then I just waited out the first 30 minutes. Then the last 2 weeks, I did that. So I kind of waited it out a little bit, tried to play a little cautious. I think that some of the times this week I didn't grab puts at the new low of the open range candle. I kind of waited and took a level, especially on Monday. I think I did that, and it didn't break the level. I think the level, what would I have, 426? Yeah, that's right here. That's down here. But I would have taken it right here too, under 426, this low right here. But I didn't break either one of those. It stayed right there. It popped. I wasn't chasing the pop either. I just waited. Then I did take puts at 10:05, which is right here at 10:05. We had this green candle right here. I think there's something came out at 10 o'clock on Monday. I don't remember what it was. Let's see if I can see on the economic calendar if there was something on the 9th at 10. No, that wasn't. Okay, so there wasn't something at 10. Okay, it just happened to be this candle right here. So when it did break below 428, what did I get it at? 760. Yeah. So when it got below 428, I grabbed puts. I grabbed the 4280 puts at 760, and they only went from 760 to 880. So that, because that tells me they only moved like $1.20. I must have got it down here closer to VWAP. So that's probably where I took it. Then it tried to bounce off. Well, it bounced off VWAP and tried to break out. It didn't break out. So it did dump finally. It broke new lower day, but I did get bought back up, and I just didn't like the way it was going. I mean, it dropped below VWAP. It popped up. It made a lower high. It didn't go over high a day, and it came back flush through VWAP. I mean, I probably could have grabbed puts right there again. I'm not quite sure why I didn't. Maybe I did in the challenge account. I don't know. I don't cover the challenge account recaps. Because if I covered the challenge account and IRA accounts, all that, these videos would be 3 or 4 hours long, and I'm not doing a 3 or 4 hour video. I do the recaps, and they take anywhere from 30 minutes to an hour, and only like a handful of people watch, because that kind of annoys me a little bit that I do these videos for people and only a couple people watch them, and only a couple people are actually taking trading seriously enough to actually watch these, and I kind of respect that they do that. I'll keep doing it for them, for those few that are watching it. But the people that don't watch it, they're not taking trading seriously. So they're not here to learn. They're here just to get alerts, and that's kind of a stupid way to look at things. But anyways, enough ranting about that, because that annoys the hell out of me. If you want to learn, I mean, I'm not going to be around forever. I mean, I'm not going anywhere, but I mean, anything can happen at any time. I mean, the room could be here for another year, could be here for another 10 years. I mean, anything can happen. You can't be dependent on me. You got to start learning. I'm not going anywhere, but I'm just saying accidents happen and shit happens in life. So It can't be depending on someone for your gravy train, then all of a sudden something happens to your gravy train and you're screwed. So learn, learn, learn. I took calls at 11:31, which is right here, right at this 429 area. Yeah, right around here. Let's say 11:20, 11:31. Yeah, right here. I took it right here. I can see why I took it here over the bodies of these candles and the wick of this candle. They all line up pretty nice right here. So I took it right there. I took the 43.05 calls at 7:30, and they went from 7:30 to 12:80. So they got that nice push right there. So it ended up working out really nice. Then I took calls again at 1:17, which was right here. Right when it broke, I think I grabbed it right here, right over the body of these two candles, because you get a nice pullback to the 20 EMA. It bounced up the 20 EMA, and I would have taken it over this 429.55 area. And they went, I got the 43.10 calls at 650, and they went from 650 to 29.20. If you held all the way through, it's a 400% gain. Definitely a big move on that. Now on Tuesday, which is the 10th, let's see, traded his room on the 10th. SPY puts into 432, which is right here, this low. Started to make a little bit of a bear flag. You can see it dropped here. It kind of rose a little bit. So I was looking at if it broke below this 426, 432 area, that it was going to have a nice drop, but it didn't. First time candle was red. I almost took it. I didn't. I almost did. And if I did, that would have definitely hurt, but I didn't take it. I hesitated. I think this might have been the day I waited for 432. Maybe it was both days. I don't remember, to be honest. But I didn't take it here. Glad I didn't. It ripped. Was there news this day on the at the 10th at opening, or no? Nothing. I don't see anything. So yeah, the first trade I took was puts at 10:45, which was right here. Not quite sure why I just jumped in front of that. 236 on the 9th. Is this the 9th? I mean the 10th. Yeah, right here. I guess, yeah, I see the hourly. Yeah, maybe I jumped the gun on that one. I think I might have just jumped the gun on that one. I could have. Let me see. Let me get the right day here. Is this the 10th? Okay. Back it up a little bit. It's just my Xbox turning on. Yeah. I don't know. I might have just gone for the round number. In fact, I think that, now that I remember, I think that RSI was really, really high at this point in time, because we're up here on the 10th, and we've already went from what, 420, $18 in 3 days. So that's pretty big move, and I think RSI was pretty heavy. And let's see what VIX was at. Or maybe I should just unlink that and just put VIX up. I don't think I was looking at VIX. VIX was at what? This is the 10th? No. 10th right here. Yeah, see, VIX was at 1650. Not really that high. So, yeah. Anyway, so I think I just went off the RSI, and for the it didn't get to 436. I kind of like rejected beforehand, and once it broke below this area 435, I kind of just jumped in prematurely. I got the 4260 puts at 850, and then it popped on me, and I averaged down at 1122, which is right here when it had this red candle. I averaged down, I added more $3, making my new average at $5.75, and then I am stopping out at 250, and I stopped out right here, and look what it did right there. That would have been super green if I did that, held that. But is what it is. It is what it is. It's nothing I could have done. You don't know what's going to happen. You know how many plays I've taken and I've stopped out of, and for like in half an hour later, they go super green. It's so annoying. You just don't know what the market's going to do. Anyone that tells you they think they know what the market's going to do is full of shit, because they don't know what the market's going to do. It's going to do what it wants when it wants. regardless of what the technicals say or anything else. It's all going to be, all it takes is one headline or one news to come out. Was this the day they had the bond auction on the 10th? No, that was, oh, that was Wednesday. Okay. I know bond auction did something one of those days, but yeah, I didn't take puts there. I didn't want to chase it. I waited. I did take puts at 12.43, which is right 12.43, right here. No, wait a minute. They did get this. Okay, for some reason I thought I got it over here, but no, it looks like that. What I did was I bought it here, added more, dropped it, made new high a day, and that's when I stopped out. And this is rounded top right here, so I did grab it right here, right around 12.43, which is right here in this candle. So I grabbed it right here, right at the 436.65 area, or 436.70 areas where I grabbed it. And I grabbed the 42.80 puts this time at 750, and they went from 750 to 1790. So I did, I know I probably sold right in here, but I did catch the, if you held, I know a couple people in the room did hold and did get that monster down. Good for them. But you never know when the home run play is going to happen, so I always focus on base hits. But yeah, 750. What did I end up selling that as on the 10th? 840. So yeah, I got $1. Yeah, so what happens is I sold at 840, $8. So what happened was I bought it here, sold it here, and when it started to climb back up, I dumped it. Then right after I dumped it, I think they went red for like a little minute, then it flushed. So it is what it is. Then I had a nice little dump. But so if you did hold it all the way through, that was a huge play, 100% play, $10 plus play on that. Then I took puts again at 208. I took at 12.43, 208, which is right here. Okay, see why I took it here. It had this nice little flush. VWAP getting bought. So it's hovering on top of VWAP, and it was in a nice little bear flag and a little small head and shoulders. You get the left big head, a little right shoulder right here. So once it got below 435, that's where I grabbed it. I grabbed the 43.65 puts at 550, and they went from 550 to 880. So got a little bit of a play right there on that. So that worked out pretty good. Then I took puts again at 227. Right here, 227. Okay, so what happened? I took it at 208, which is right here, right around this 435 area. So it looks like I bought it here, I sold it when it dropped, and when it popped back up, I reloaded. Yeah, that's what I did, because I had the 435, the 43.65 puts at 550. They went to 880. So that is this dump right there. I'll blow this up so you can see it. So that is this drop from here to here. Then you can see it opened up here close to the VWAP. So for some reason I reloaded here. It was risky, but I reloaded the same puts at 43.65 at $6, and they went from $6 to 10.30. So that ended up being a good play. Risky, but a good play. Still within the head and shoulders. And I think that's why I reloaded, because it was still within the head and shoulders. It didn't even really dump. It stayed right there. So yeah, kind of a weird day. This whole week's been kind of weird a little bit. Then on Wednesday was FOMC day, which was the most boring FOMC I think I've seen in a long time. What day was the bond market? Was it? It wasn't Wednesday. It was Thursday. Okay, so traded ears room on the 11th. SPY puts under 34.50. 434.50 was just down here, this low right there. I like using pre-market numbers as like the nearest 50 cents or the nearest dollar. Even if there's like nothing really close, I will use that because I don't want to say 434, 68, or 60, 65, because you know there's so much volatility at open. If you use those like that, you could get in just enough to get taken out. So get faked in and faked out. So got to be careful about that. So didn't break the what was it, the 44, 34, 50 area, but we had a nice green candle right here. I was looking to the downside. Inside candle right here, red candle. So when it broke below lower day, which is 435.65, I took the 43.55 puts at $7, and they went from $7 to $8. I don't know why they didn't go that far. It might have been because I was a little further out of the money, and it was FOMC. I don't think it was that expensive, but it might have been just expensive enough. So yeah, only $1 move in that play, so I'm not going to complain. Then I took puts again at 1037, which is right here. Get these nice 3 red candles right there. Kind of an FU setup a little bit. Green candle, it kind of like inside candle. So when I broke below the body in this area right here, 434.80, I took puts. I took the 43.55 puts at 840, and they went from 840 to 930. Got a nice almost $1 play out of that. Then it popped. Then I took puts again at 1116, which is right here. It popped up, went over VWAP, but got harshly rejected and came back down. So when this came back down harshly below this 434.75 area, I grabbed puts again, the 43.55 puts at 750, and they went from 750 to 980. So got a little bit of a play right there. Definitely like that. Whenever things start to pop and it gets quickly rejected, going back to lower day really quickly, usually they break. So definitely happy with that. Got a few good plays in. I don't usually play before FOMC, but on days it's not non-Powell, if something looks good, I'll play it. But if it's Powell day, SPX is way too expensive, and it's not worth playing. So, and another reason I like playing before FOMC is if you start playing and you take a couple losses, you're very hesitant and skeptical about taking a risky FOMC play and taking another loss. So to me, I look at it from the point of view that if you don't trade, there's no losses, and you're not taking any unnecessary risk. But if you trade and you win, and things look good, you can keep doing it, or you can just sit and wait. It's up to you. But to this particular Wednesday, I just decided just to go for it, and I did. I'm kind of glad I did, because the FOMC play did not work out that good. It ended up being a small loss, but it is what it is. I took the SPX strangle play, was 43.45 puts at 720 and 43.50 calls at 650, and which was right here. This was FOMC right here. This candle right here. That's it. This is all we got. Then it popped more right here, but yeah, this is all we got. This is just, if you were to look at this chart, usually when you have FOMC at 2 o'clock, you see a massive wick going in both directions, or at least one direction, a massive candle. This candle is the same size of every other candle during the day. You don't even look like, if you were to look at this day, you would say, no, there was no FOMC this day, because of this was the candle. These 2 candles right here, nothing. So I had the 43.45 puts at 720. I ended up dumping them at 1, thinking that I dumped the calls at first. I had his calls at 650, and they went to 1140, and I took the calls when it popped, and because usually the first move's the wrong one. So when it popped, I sold calls into it, held my puts, and it just kept going. So then I just dumped my puts. So not much of a loss, very, very minimal. It is what it is. Then I took calls again at 329, which is right here, 329, right here. I think I took it right over this 435.30 area, because you get the wick, and you get kind of like these 2 wicks right here kind of pierce through it, but it's close. So it's lining up pretty good right through here, and it's making like an ascendant triangle right here. Bullish ascendant triangle. So definitely Looked like a nice little bullish play, but I was kind of hesitant about it, but I just said, screw it. I took it. I took the 43.70 calls at $1.80, and they ended up going from $1.80 to $7.40. So they ended up going having a nice little pop right here when it finally did take off. So ended up being a good end of the day play. So very happy about Wednesday. FOMCs lately, they've been duds. I mean, they've been really, 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 really duds. This day was one of my very frustrating days on Thursday. Traded Israel, SPY puts under 436, which is rate 436 down here, the round number. Was there anything the day before I might have used? I do like to use the day before. Yeah, you can see right here, the high right here. Resistance right there, which is now support. So you get that right there. Plus the 436 round number. Ended up working out pretty good. So I took 43.60 puts at 940. First 10 minute candles red. Took puts right here underneath the lower day. This was, we had morning news this day. This was when CPI came in hot. Inflation came in hot across the board, year for year, month for month. Unemployment claims are up. And it came in hot because obviously it came in hot. This dumped. Initial reaction was not good. So to me, I was looking to the downside immediately because of that. Inflation going up is not a good sign, but the market just cares what it cares. So I took puts after it made a new lower day on the second 10-minute candle. The 43.60 puts at 6.30 and then went from 6.30 to 10.20. Ended up being a good play. Then I took puts again at 10.44, which is right here. Popped up the VWAP, rejected VWAP, came back down. When it broke below this 435.50 area or 40 area, I grabbed puts. The reason I like grabbing them like right here instead of down here is because if you grab it down here, lately we've been doing is we've been double bottoming, or we'll like flush through lower day quickly and get bought back up, and sometimes you won't have the time to sell or have a good play. So to me, I'd rather go off the bodies if we have a little bit of a difference between bodies and the wick. I'd rather grab it right here. That way, if it does double bottom or make bounce off lower day, that you can get a play in. I mean, from that wick, right from this body to the wick, is almost 50 cents, and that and the SPX is $1 plus move, and that's easy money right there. But for some reason, I bought the 43.60 puts at 7.30. I bought it right here. I didn't sell. I think the move might have been too fast and it got bought back up too quickly. Then I ended up stopping out. I ended up stopping out at 3, so I wasn't too happy about that. Then I just kept thinking that all day long I had the bearish sentiment that the inflation's coming in hot, the market's not caring. This is really nothing positive going on in the market and stuff with going on in the Middle East. There's a million reasons to be bearish, and there's just no reason to be bullish whatsoever, but the market just does what it wants to do. So when it failed to break new lower day right there and I stopped out and I saw this, then it dumped hard. It dumped hard on the 30-year bond auction at 1 o'clock. Was it 1 o'clock? Yeah, 1 o'clock, which was right here. And I was so pissed. And it kind of like ruined my day. And after we had this monster red candle, I didn't want to chase it. I mean, because you get to think in hindsight. Yeah, it's always easy to look at stuff after the fact to say, oh, if I bought puts right here, that would have been an awesome play. But yeah, but you don't know it's going to do this. But in real time, you do not know if this is going to. We have seen so many times where we have had a massive red candle like this, and it gets bought back up quickly like this. We've seen it so many times over the past couple weeks. So you can't blindly jump in because of a big red candle and expect follow through. You don't know, because this candle, I was not expecting this kind of a reaction from the bond auction. We've had bond auction dumps before, but nothing like in this caliber. So it was really bad. But anyways, you just look at it after the fact. You see how easy it is. That's not how trading is. You got to use the information you have. And what's been happening the last couple of weeks, these big red candles have been getting bought, and the thing's been getting V rallied. So chasing this was crazy. I basically, after this big red candle, I was waiting for an FU setup, a green candle. Couldn't get it, couldn't get it, couldn't get it. Almost right there, but I couldn't get it, couldn't get it, and couldn't get it. And finally we get a monster green candle, and it didn't. It kind of like V'd a little bit. And it didn't make new lower day. So to me, an FU setup was the way to look for it in this kind of a scenario. It never came. The setup never came, so I never took it. Instead, I just watched my loss that I took over here go super, super green, and just was really put me in a foul mood. And I just was looking, okay, I could have grabbed calls right here, and I didn't. And I just, to me, it kind of ruined my day. So I didn't want to trade anymore that day. So I called it. So I'm not going to lose sleep over it. So, but yeah, it was tough to watch this. And yeah, kind of ruined my day, and I didn't want to take it anymore. Didn't want to play anymore that day. So Friday 13th, SPY puts on a 433, which is right here, this low. I had a massive run up right here, green, big massive green candle. RSI was high. I got a bit of a day indecision, big indecision candle right here. So when it broke lower day right here at 10 o'clock, I grabbed puts. I grabbed a 43.50 puts at 710, and they went from 710 to 1110 right there, and that ended up being a good play. Then I took puts again at 1040, which is right here. Big red candle, got retraced halfway through. I used to love these retracement plays, but they've been kind of risky lately. I didn't take new lower day there. I wasn't sure because I thought because of the way this got bought up that this might kind of like go back to higher day. SPY's been crazy, so it did drop to new lower day. Then you had these candles right here. You get the wick, and the body right here. These all lining up right there. So I took it underneath the 434.25. I like the way all these were setting up. No green candles. Yeah, I could have waited for a green candle, but these were pretty good candles right here. Pretty good candles all lined up really, really nice. I like seeing a bunch of 10-minute candles lined up. It gives you a nice area to go off from. So when it did break below this 434.25 area, I grabbed puts. I grabbed the 43.45 puts at 8:30, and they went from 8:30 to 12:20. So that ended up being a nice play on that. So that ended up being a really good play. Then I took calls at 12:20, which is right. I didn't take it here. I almost did. Right here. As you can see right here, this is what I like. This is the thing you got to look for. It starts to look like it's bottoming out. It's starting to get a little bit of a round bottom right here. This is maybe what I was waiting for the flush, because people were probably piling in at 432. 432 got bought again. A little bit of a green candle, starting to look like it's going to bounce right here, kind of like maybe even V rally possibly. You got to remember that people don't know what's going to happen. And they're thinking, okay, that it's getting 432 is getting bought and it's gonna bounce. We're gonna have a V rally or whatever. So, and they make it look like that. They buy in calls right here and they take out the stops right at new lower day right here. So you see how they start to make it look like it's gonna bounce, and then boom, they flush out the stops. Then it bounces. So when this happened, I looked at all this lined up perfectly. The body, right here. 4 bodies right there over the 432.55 area. Once I got over that, I took the 43.40 calls at $8, and they went from $8 to $12.20. So that ended up being a nice play. I didn't take puts down here. I think I might have in the challenge account. I'm not 100% sure, but I took calls again at 259, which is right here. Yeah, 259 right there. Look at all these candles right here. It's fighting. It's dog fighting the 431.50. Rejected. It keeps going, but it can't seem to get out or break down. It started to drop right here, and then it quickly bought back up. So when it dropped and quickly came back, this is where I grabbed it, because it was just bouncing. It was just tweezing right here between the area. It pop, drop, pop, drop, pop, drop, pop, drop. It was just an endless cycle. Then when it actually dropped more outside this area of these wicks, I kind of got more curious. And when it dropped more right here, I think I actually had this in the challenge account. It dropped more here and quickly came back up. And once it got over the body of these two candles, over 431.50, that's where I grabbed it. I grabbed the 43.30 calls at 590, and they went from 590 to $10. So that ended up being a good play on that. So yeah, that ended up being a good play. So that is what happened this week. Not a bad week, actually. Played patient for the most part. Thursday was kind of a rough day. I kind of had the right idea, just had the wrong timing, and I was not expecting the bond market to really. Sometimes I pay attention to the bond market auctions, but sometimes they move, sometimes they don't. And you get to where you watch them when they have big moves, and you start watching them, and then they'll move for a long time. Then you just forget about them. Then they move, have a substantial move again. It's just one of those things that's not really a big deal until it is. And once in a while, it does fool you. So kind of a frustrating week with the bond market and flushing out me taking a loss, and FOMC not really doing too much. Kind of the most boring FOMC I've seen in probably a long time. But other than that, it was a pretty good week. So with that said, that's going to do for the recap, and thanks for watching.